Hey everyone, it's Matt Donahue with Mission Financial Planners. We're going to jump into this week's market update. This is the week of January 10th. Martin Luther King Day was on Monday. Every year, Martin Luther King Day reminds me of some of his writings when he really wanted opportunities for his kids that he knew that they weren't going to get. And so for me, that's a huge thing. I have two girls. I just want the best for them. Martin Luther King is a great example of what we can be if we're really just focused on a better future. So let's jump into it. The biggest thing is just staying disciplined. This week's a great example. We've had a lot of volatility because of some policy uncertainty coming out of Washington. Hey, markets are going to shift. Laws are going to change. There's going to be friction at what seems like the wrong time, but your framework is always going to be there. You can return to that framework really at any time. A lot of people like to poke fun at January, New Year's resolutions and all that, but January gives you an opportunity to just do a clean reset. Decisions can be made that are going to have a positive compound effect on you over the years. So as we move into 26, there's a lot going on. Markets have done well. Earnings stay solid at companies. The economy has shown a lot of durability, but policy uncertainty is still the theme. It's the world we live in today. There's uncertainty around fiscal policy, monetary policy, geopolitics, interest rates, and that has pushed risk premiums higher because investors are demanding more return for the same amount of risk. It's not because they're being pessimistic, it's just because the rules are now a little murky. So even as inflation moderates and employment remains strong, markets are going to react sharply at every hint about future rate cuts. Has the Federal Reserve been less definitive? Yes. That ambiguity is enough to increase volatility. I don't think most investors are afraid of bad news. They're just afraid of not knowing the rules. You actually see this quite a bit in bond markets where yields remain elevated but range bound. You also see it in equities where gains coexist with sudden pullbacks that are driven by headlines. And you'll see it in long-term treasuries where term premiums remain stubborn because policy risk won't go away. Policy uncertainty doesn't eliminate opportunity. It just demands some discipline. It pushes investors to stop reacting and start anchoring decisions based on what we actually know. And that's where taxes and timing are going to matter. Our key data card and the 2026 retirement checklist, they're not reference sheets, they're guardrails. Right? They give you fixed points in an uncertain environment. For example, let's just talk about the standard deduction. It sounds boring, but it's one of the most important lines on your tax return. For 25, a married couple gets $31,500. Singles, $15,750. Head of household, $23,625. That baseline determines whether planning is simple or complex. The reason why is most people no longer benefit from itemizing. So planning shifts away from the deduction chasing towards income control. When income is managed well, taxes can take care of themselves. Age is going to matter as well. If you're over 65, there's additional standard deductions. Those quietly reduce taxable income. Maybe right when Roth conversion, Social Security timing, and Medicare decisions have to be made. Ignore that, and you miss some of the most valuable planning years of your life. Child tax credit is another example. At $2,200 per child, it's partially refundable. It's a big deal because credits reduce taxes dollar for dollar. Losing them can actually really have a strong impact on your tax return. Capital gains, qualified dividends, that's where planning shifts from defense to offense. So there's three different brackets essentially, right? 0%, 15, or 20%. How do you fit in? And then if there's the net investment income tax, you've got different taxes, income, capital gains, net investment income tax. When you put it all together, it's not maybe so much about market timing anymore, it's tax timing. And that's something that you do control. January is when all of this begins to turn into action. That retirement checklist starts the year with deadlines that matter. Medicare enrollment windows open. January 15th, estimated taxes are due. And on top of that, you've got income decisions you have to make. So here's the takeaway. You're going to drift. Everybody does. We all do, right? Drifting is not failure. Refusing to restart is. I saw a funny meme this week that said, like your GPS. Your GPS, when it takes you the wrong way, what does it say? It says rerouting. It doesn't apologize. It doesn't sit there. It doesn't stop. It tries to reroute. And that's what you do. So why not do it right now? It's a great time to start. Give us a call, 888-339-0093, or feel free to reach out via email, and have a great rest of your week.